Let's talk markets now. The market is still up 0.36%. I have Mr. Rotimi Fakayejo, who's a stockbroker and financial analyst, is joining me via phone. Mr. Fakayejo, how are you today?
Good afternoon.
Good afternoon. Gainers for today, we have the likes of Boa Cement, Sunu Assurance, Jay's Bank, Union Bank, RT Briscoe. Losers, Royal Exchange, Multiverse PLC, Mayan Baker, Cornerstone Insurance, and NGX Group. What is your reaction to the trading pattern today on the show?
The results of various quoted companies are already out for the third quarter, and evidently none of them is reflective of what we have seen today. Well, basically, with the likes of Boa Cement and Jay's Bank and UBN, I think the position is quite informed of what has actually transpired to move their prices up. Most importantly is the position of UBN, which the news came out that they are going to be mandatory takeover of about 1.something billion shares that is still outstanding. So with that in place, I think that also triggered demand for the stock. With a huge lead that we saw in Boa Cement and not a corresponding decrease in other securities. So the all-share index today moved higher. And I think it's equally evident too, at least the volume down today is quite remarkable, at least for the time that we are. The total value down today was 2.72 billion of a volume of 159 million. So I believe all in all that the market today still at least puts smiles on the faces of investors, and the expectation that it was going to be all red. I think that one is being put to rest. Though they still have that time to come, but it's just good enough to know that now and then we're going to see the market go up and come down. But all the same, we're already below the 45,000 basis points, but we hope that it will not go much lower than where it is at about 44,000 basis points.
All right, so what is your projection? Are we likely to sustain this, despite the fact that we've had the belief that we'll stay in red for some time, particularly as we move to an election here?
I think if at all we'll see a change, it is going to be temporary. It may not last long. And the only thing that can trigger that change now is when, before the expiration of the month, which is the deadline for the submission of the Q3 results for quoted companies, we may still see some positive trajectory of the all-share index because of some good results that may come. But thereafter, there is really nothing to trigger any expectation. So, but how the electionary and also preparation towards the election, vis-a-vis campaign and all other activities, those also will have a long determinant in how the market moves. But what is really appalling right now is the declining exchange rate of the naira. It's really disturbing, both in all markets, both the CBN regulated market and also the black market. So for now, we hope that they will be able to send that, but it's unlikely. So if it continues, it will definitely impair on the NGX.
Thank you so much, Mr. Fakayejo. Do enjoy the rest of your day.
You're welcome.
Effiong Ekop, what do you make of the trading? It's looking good. Is it better than what we had yesterday?
Yeah, the market is on recovery trend and is being seriously addressed. Look at the volume that we are handling now. It's improving, 158 million units, worth nearly 3 billion. So there's a little level of improvement. And we see manufacturing companies with the banks and insurance firms struggling, to take positions and then raise activities in the market. As he said, investors and fund managers are looking towards Union Bank to see what advantage they can take from the equities of the bank that goes into a kind of acquisition by Titan. So there may be incentives in the markets any moment from now to draw attention to, but then the cautious transactions need to be sustained in the sense that whatever anybody is doing, he needs to weigh the impacts of political activities that will hit the economy and by extension the stock market. And so we are seeing markets on a recovery beat, but it is very slow as expected because not so much incentives are out there to support this. So the recovery is just little by little, little by little. So analysis and careful watching of trends are what majority of the fund managers or investors need to pay attention to. And so as it is, as we move towards the close of the year, we are not going to have very large volume of trades. But then those who study certain sectors and be able to calculate what they think after seeing what they have done since January, they'll be able to place themselves in such sectors to be able to get advantage from trading from such sectors. Basically, manufacturing companies and then the banks. As we move towards the dry season, after the flood now, cement firms will need to do a lot of sales. You understand that? And so that alone can open a window for investors who want to play big. Luckily, we have these two big cement companies, WAPCO, and then there are even three now, WAPCO, Bua Cement, Dangote Cement. So a lot of activities we expect around that sector.
Thank you so much, Effiong Ekop. Let's leave it at that. Enjoy the rest of your day.
Thank you.
All right, then, well, let's go outside our shores. Asian equities fell to a new 2.5-year lows today as early gains inspired by a rally on Wall Street and hopes that Federal Reserves could be nearing the end of aggressive rates increases were offset by weakness in Chinese shares, and the year-end equities were mixed in Asia, with Japan advancing 0.7%, South Korea rising 0.3%, but Taiwan was down 0.7%, Hong Kong shared 0.6%. MSCI's broadest index of Asian Pacific shares lost 0.4% after dipping to 427.4, the lowest since April 2020. The mainland Chinese benchmark index shared 0.6%. The offshore yuan tumbled to yet another record low against the dollar, weakened to as much as 7.36 to a dollar. The Dow Jones Industrial Average rose 1.34%, S&P 500 gained 1.19%, and the Nasdaq Composite added 0.86%. European stocks rose in early trading today as investors took confidence from the signs that the U.S. Federal Reserve could slow down its rate increases, although concerns about China's economy still weighed on Asian market. Asian equities struggled to make gains due to uncertainty over whether Mr. Xi Jinping's new leadership team will prioritize economic growth. U.S. business activities contracted for the fourth straight month. Data on Monday showed this and are suggesting that the Fed rate increases have softened the economy, which in turn raised hopes that the central bank could begin slowing the pace of hikes. The expected peak for Fed rates had edged down around 4.93% from above 5% early last week. China's Ministry of Finance will impose a consumption tax on e-cigarettes sold in China from November 1st. That's according to the notice published earlier today. The taxation policy will further entrench China's once scattered e-cigarette industry into the country's state-backed tobacco monopoly, a major generator of tax revenue for the country. According to the Ministry of Finance, a tax rate of 36% will be placed on production or imports of e-cigarettes, while an 11% tax will be placed on wholesale distribution of e-cigarettes. Oil prices on the international market fell by more than $1 per barrel today as bearish economic data from key global economies heightened fears for demand, as U.S. West Texas Intermediate crude is selling for $83.43 per barrel, with a price decline of 1.36%. Brent crude futures sells for $91.96 per barrel, experiencing a downward price margin of 1.39%. Bonny Light experiences an uptick of 0.36% to sell at $92.73 per barrel. And for the OPEC basket, crude oil dealers offer $92.09 per barrel with a price decline of 0.42%.